Prestwood pioneered lifelong cash flow modelling. And today, it's hard to think of financial planning without offering clients a real picture that shows them their financial future. This video demonstrates the power of financial planning. It acts as an introduction to cash flow modelling and helps you understand the opportunity that exists to build deeper and more meaningful relationships with clients whilst increasing profitability. Our aim is to provide financial planners with the most capable cash flow planning software available, enabling you to look after all your clients' wealth and create greater value in your business. It's clear that you help clients answer some pretty important questions. When can we retire? Will we run out of money? Should I cash in my pension? These can't be properly answered without providing them with a complete and accurate cash flow forecast, painting a compelling picture of their future shortfalls or opportunity, enabling you to provide options that help achieve their goals in life. Our software is used by many of the UK's leading financial planners. Let's introduce the fact find for our clients, Michael and Jane. With Truth, simply enter or import the details from your client fact find. It's seamless. We would expect this to include the client's goals, dreams, and objectives. Most of this detail is gathered in the initial or second meeting before you present the plan to the client. It's always worth checking the data is correct, and most planners will run through and confirm all the assumptions and information with clients. This also acts to validate the outcomes when discussing the plan in more detail. From the fact find, we can then create a net worth statement. This is the list of assets and liabilities that Michael and Jane have told us about as at today. We want them to confirm all the figures, and if they want to change something, that's not a problem. We can change it with them there and then, during the planning meeting. It's worth taking note of the value of their liquid assets at this point, as this is the starting point for their cash flow. When they're happy that all the values look right, we can move on to the next statement. Let's take a look at income. The income statement shows all the money coming in for the current tax year. We know how much their salaries are. We know the value of their investments and have agreed the projected growth rates to use. As a result, we can predict the likely returns from their savings and investments. At this stage, we can also start to consider tax implications. If we move along to the Income Tax tab, we can see any tax payable at each tax rate and band, along with national insurance contributions for both of them. Again, we want Michael and Jane to accept or challenge these numbers. There are added benefits too. This exercise has helped many clients get tax rebates as it accurately calculates their tax position, which has been known to be different to the tax they actually pay. The next screen shows us their net spendable income. We can see what ought to be deposited in their bank accounts each month. Again, we want them to confirm this is about right before we proceed. With each step, the clients trust the data more and more and really start to take ownership of their plan. We can also go back to the Statement tab, showing Michael and Jane's projected future income streams, stopping and starting. Scrolling forward 1 year at a time, we can see future inflows in today's terms. Or we can use the date wheel and jump straight to a key date, such as the year they want to retire. Here, we can see pension income starting, and if we scroll forward 1 more year, we can see that salaries and benefits in kind from their business have stopped. We can use the date wheel again to select Michael's age, 68. This allows us to see Michael's state pension kicking in. When they're happy and have confirmed that everything looks right, we can move on to the next statement, which is expenditure. Expenditure often throws up some interesting discussion. When done properly, the power of cash flow modelling is that there is no ambiguity. It deals in reality. There should be no guesswork when understanding where clients spend money. Again, we want Michael and Jane to confirm or change any of the figures. We can click the play button and let the statement animate through each tax year. We can see the children's projected education expenses starting, changing, and eventually ending. We can also see the amount being spent on holidays increases from their retirement age, modelling their desired lifestyle. Michael and Jane are now satisfied that we have correctly modelled their projected assets, income, and expenditure. We're building a comprehensive picture of their financial future. We can now analyse the results together. We can compare all inflows with outflows and see if there is a cash surplus or deficit for each year. For next year, there is a large overspend for the sports car that Michael plans to buy for his 50th birthday. This is followed by several concurrent surplus years while they work in their business. After retirement, more is spent than comes in every year. But this doesn't take into account their liquid capital. So have they got enough money or not? Let's go to the cash flow statement to see. Cash flow statements allow clients to really understand what their future may look like. Here's the lifelong capital chart in today's terms. It combines all liquid capital, inflows and outflows projected forward for the client's lifetime. It doesn't include their home or business or any other non-liquid assets unless they're eventually sold. It's very easy for Michael and Jane to see and understand that based on current assumptions, they're going to run out of money at Michael's age 72. We can overlay inflows and outflows on top of the capital chart. We can see that they're accumulating capital while they work up to retirement when inflows are greater than outflows. There are a couple of dents where Michael wants to buy a sports car at age 50 and a holiday home at age 55. After retirement, they start drawing on capital and run out of money here. Then their planned expenditure, which exceeds income, results in this shortfall. An advisor's role is to help clients plan a secure future. So let's see how we can help Michael and Jane achieve their goals and get the red off the chart. We'll preserve the current position and look at some solutions in a what-if scenario. At the bottom of the chart are key date events linked to relevant items in the fact find. We can slide them along the chart and instantly see the impact. Let's delay retirement for 3 years by sliding retirement from 60 to 63. With one simple action, employment incomes continue for 3 more years. The more expensive holidays are delayed for 3 more years. There are 3 more years of contributions and growth on their pension funds, and 3 less years withdrawing from them. Now they will not run out of money until Michael's age 91. Let's drag the retirement date back to 60 and look at other solutions. How about downsizing at, say, age 70. It's not something Michael and Jane had thought about, so the slider is off the scale at the moment. Let's track it on and see. It releases £100,000 of capital in today's terms and takes the blue on the chart to age 79. From what clients tell us, we know that scenario planning is the most powerful part of financial planning. There's a whole suite of tools you can use together to look at more solutions. They're the owners of their business. Let's use the More Inflows calculator to see what lump sum would be required today to get the red off the chart without the capital chart ever going below, say, £10,000. In this case, they need to realise just over £350,000 today to achieve their planned lifestyle. This isn't the amount they'd need to sell their business for today, because the forecast still includes their salaries up to retirement. However, we can see what they'd need to sell it for at retirement. In this case, the net proceeds need to be around £557,000 in actual terms, or £391,000 expressed in today's money. A very useful figure to know in advance. If the client doesn't want to sell the business or depend on the sale, we can look at other solutions. Let's see how much more earned income or even dividend income they would require each year from now until retirement to get the red off the chart. We select regular earned income for more salary. Let's have it level from today until retirement. Michael would need additional salary of just over £66,000 per annum until retirement. For business owners, we can take this even further. Using their abbreviated accounts, we can send that figure to the Analysis tab of the business and see what the increase in gross margin would need to be to fund the income. In this case, an additional 2.75% is required, bringing them just above the industry average for their sector. They can decide whether to increase sales, reduce costs, or put up prices. Let's go back and consider other calculations. We can use the growth calculator to find out how much more growth would be required on selected investment types to get the red off the chart. This, of course, starts to open up the important conversations around risk and reward. Here, we can see they would need additional growth of 1.46%. With any solution, we can overlay it on the original cash flow chart. We can keep or remove the solution. Let's remove this one. If we simply want to know when the client is able to retire, we can save time and use the key date calculator. This calculates the earliest the retirement date can be, whilst ensuring they will still not run out of money. Let's find the earliest date for retirement. In this case, they can retire when Michael is 63 years and 328 days old. We can use the Fact Find targeter to make calculations using specific fact find items, such as what the contribution needs to be for this proposed additional pension policy. Once we've selected the item to target with, we can choose what capital sum they'd like to target and at what age. Here, we're aiming for a balance of £10,000 at the projected cash flow end, Michael's age 100. This example shows that if Michael's business paid almost £3,000 per month into his pension, he and Jane could still retire at 60 and achieve everything without ever running out of money. Let's keep this solution in our what-if scenario. Now, let's go back to where we started with the current position and overlay this with the what-if scenario. In this case, the only change in the what-if scenario is the proposed employer pension contribution, which assumes benefits will be taken as an annuity. We can create other scenarios in settings. For example, a take drawdown scenario. This way, we can model a drawdown crystallization, or whatever you wish, and compare different solutions. What this allows us to do is create comparisons, so we can now compare taking drawdown with taking an annuity. In fact, you have complete control of modeling as many crystallization events as you wish to suit the needs of each of your clients and make informed decisions together. The value to clients is tremendous. Working with an advisor and planning in this way helps them make truly informed decisions, building value and trust in the relationship. There's more to consider, so let's go back to the what-if scenario. The cash flow tools can help give peace of mind to those that appear to have more than enough capital. To demonstrate, let's give Michael more money by retiring him later. Now let's see how much extra they could spend from retirement without the capital chart ever going red. For this, we use the More Expenditure calculator. Here we can look at an additional monthly, annual, or lump sum that can be spent or gifted away and still never let capital drop below £10,000. Let's stick with a monthly amount escalating at 3% per annum from retirement onwards. In this example, it's an additional £2,578 per month. Seeing this may encourage your client to retire earlier. Think of more ways to enjoy their retirement, or gift amounts to their children and watch them enjoy it. Of course, investment returns play an important part in financial planning outcomes, and as we know, they can fall as well as rise. So let's consider future market falls. The client has more than enough money, but let's simulate a market fall for selected investment types. Let's assume it happens tomorrow and falls by 30% without ever recovering. Here we can see the impact of the reduction in liquid capital, but they're still not going to run out of money. This could give your clients peace of mind or stimulate conversation during the planning meeting. This easily demonstrates their capacity for loss. So far, the solutions have all assumed living a long and happy life. We can also look at catastrophes, such as what would be Jane's situation if Michael had died yesterday. Let's select the Michael died yesterday catastrophe. In this example, Jane would run out of money when she's age 59. This sort of planning helps you discuss protection needs. In this scenario, the inflows/outflows chart shows some life assurance coming in, but it's clearly not enough. We can use the More Protection calculator to work out what additional protection is required as a lump sum amount for Jane. In this case, £870,000. Or, if a family income benefit policy is preferred, we can calculate the amount from that instead. In this case, £55,000 per year for 17 years. This time, let's keep that solution. It's exactly the same consistent approach for looking at all catastrophes, whether Michael or Jane had died, or if either of them became disabled or in need of long-term care. Let's take a look at the catastrophe of Michael becoming disabled. Again, we go to the More Protection calculator. Let's calculate the lump sum required. The critical illness policy lump sum payout would need to be £594,000. Let's show the impact of having the policy in place, and let's also assume that the client will proceed and keep the result. In the past few minutes, we've looked at many different solutions for Michael and Jane living a long and happy life, and have examined catastrophe scenarios. All this helps the client build a picture of their financial future. We can use a dashboard for an overview of all the scenarios and catastrophes we've covered. Here, the top row shows the current position charts with them running out of money for no catastrophe and Michael dying or becoming disabled. The bottom row shows the what-if scenario equivalents. Whatever the scenario, from retirement planning to gifting money or selling a business, Truth's powerful software enables you to take clients on a future journey, enabling them to plan for the life they want. It helps them visualize and achieve their life goals, while supporting a compelling planning process, giving you a robust audit trail and justification for advice. It empowers both the financial planner and the client. With Truth, you will see your clients' lives and your business transformed. Is it time you took a closer look?